From San Francisco, California, this is the Merkle Podcast with Noah Detweiler.
Hello, one and all. Welcome to the Merkle Podcast. On today's edition, I am pleased to be joined by Dan from TheChartGuys. Dan is a technical analyst. He co-founded TheChartGuys.com, which is one of the preeminent information sources for crypto traders out there. His company recently unveiled a crypto alert system, which I think you'll find interesting. And no one's better at breaking down the charts than Dan, in my opinion, so I wanted to bring him on in light of the craziness that we've observed in the markets over the last several days now. So Dan, welcome to the Merkle Podcast.
Thanks for having me. Glad to be here.
So Dan, are you a little like Beyonce or Keisha in that you don't really have a last name?
I try and keep some separation of my private life because it's a big, wide world of internet out there.
Yeah, you never know if some moron's going to try and hack into like one of your exchange accounts or something, right?
Exactly.
So Dan, let's start with the Bitcoin chart, because the big news, of course, on Wednesday was the SegWit2x fork being postponed. We had a wild day of trading, set a new all-time high around 7,900, retraced all the way back down to just above 7,000. And I would love to hear your thoughts, sort of long-term, where Bitcoin moves from here. Because my sense was Wednesday was a climax. It felt like perhaps the end of a chapter in the Bitcoin story. And now it's time to take a deep breath, and maybe the days of setting new all-time highs every 2 days, seemingly, are over. Do you see things like that?
Yeah, I definitely do. And I feel like this run was a bit artificially pushed forward by, having this on the horizon where people were looking for perhaps a free handout. Whether or not that would have actually transpired remains to be seen. But people had that, mindset because of last time. And I know it was different than last time. There was a lot of confusion in the marketplace by that. But the fact that that was, a goal and a timeline that we were working towards, and we can expect the price to go up at least until then. That is what drove the price forward. And you look at the weekly chart for Bitcoin, and we absolutely need to consolidate. It is extremely overbought. And I know we're in blue sky breakout, so it's a little bit of a different scenario in terms of how high we can run. But you are right about the volume climax that crazy reaction saw. And you're right that right now the sentiment in the general market is that Bitcoin is going to consolidate a little bit. I personally am surprised that it's not doing it in a very rapid way. It's doing it pretty contained at this point. And I do feel that we will pull back, even if it's down into the low 6,000 range, even down into the 5,000 range. The way that the weekly chart is set up right now, we could pull back to the $5,500 level and still be in an extremely strong long-term bullish uptrend. So the great thing about this market is that when Bitcoin cools off, the money's going to go somewhere else. And that's because, in my opinion, there is no bubble at this point. I think it's reached enough mainstream adoption. And I know a lot of people feel that mainstream adoption is the reason for a bubble to take place. But I'm coming from a stock world, and I still see so much money that is just waiting to get into cryptocurrencies that cannot, because of the hurdles in place due to the lack of, exchanges or the lack of any link between our brokerage accounts. I'm just thinking of the people that are 40 to 60 years old that have, more money than the younger generation, and they want things easy. And, the stress of uncertainty of creating an account on this unknown website, and can I trust it? And can I put my money there? And how do I buy it? And what's with the transfers? All of those are barriers to entry for an older generation that doesn't really have the tech savvy, hop on YouTube and figure out how to do this like we do. So I feel once that market opens up, and it slowly is getting there, we've got Fidelity, a major brokerage. They've got their CEO, very pro cryptocurrency. I do believe that they are feverishly working behind the scenes to open the doors, open the floodgates to the general market. Because in 2017, this is pretty much the market jumping up and screaming, hey, we want this. We'll give you our money. Give us services to, allow the facilitation of buying and selling these cryptocurrencies. And right now, it's my opinion that the big boys are working behind the scenes to, like GDAX right now is one of the major exchanges, and it's just one of the first ones. I do believe that we're going to have major replacement exchanges with better features. And I think it's all just in development. I just think this year was the start in terms of the market waking up and screaming, hey, we have money, take our money, give us the services surrounding this space.
Yeah, and it is interesting, Dan. You mentioned the B word. You alluded to a bubble, right? And as you know, the contention among many people working in this industry is that we are, in fact, in a bubble. So that's been something I've been thinking about a lot, because I hear people like the founder of Dogecoin saying that. Even one of the co-founders of Ethereum recently stated, of course we're in a bubble. So that's sort of become my view, that the massive price increases that we've been seeing over the past year or so are largely due to speculation more than anything else, and that's not sustainable necessarily in the long term. So it's interesting to hear that you, for one, as a technical analyst, do not believe that we're in a bubble.
Yeah, it's really, I mean, and also you have to trace it back to what's the definition of a bubble. And our definitions of bubbles might be different, where, you know, how significant of a drop is considered a bubble. But obviously, like I said, Bitcoin could easily pull back to 5,000. I wouldn't call that, I guess, I mean, that's a big pullback from...
I wouldn't call it a bubble either. I guess I'm thinking back to the past Bitcoin bubbles. There were two in 2013 alone, the latter of which saw the price fall from about 1,100 to the low 300s. I mean, it was not a 20% drop. It was more like more than a 50% drop. I guess the equivalent these days would be if Bitcoin fell below the low on the weekly consolidation at 3,000. You know, if it fell under 3,000, would you consider that a bubble? Is that sort of what your definition would be?
Yeah, well, that's a 66% drop from the high. That certainly would qualify, in my opinion. And I want to clarify that I think the bubble, if it were to occur, it would have to happen for a news-related reason. So say the U.S. government comes out and says, you know, nope, we're not doing this anymore. We're shutting down all the exchanges. And, you know, if they were to really fight it, which at this point it's hard to imagine, but that would be a scenario where I could imagine a bubble. But in terms of just, you know, everybody just saying, oh, we're done buying and we're all going to sell and race to the exits, I think that we've seen enough, you know, gains and enough continuation that there is always going to be big money looking to buy significant dips. Whereas, you know, unless there's news that comes out that, you know, the Bitcoin technology is no longer viable and it's not going to be a thing. My point is it would have to be extremely bearish news to facilitate a drop of 60+% on Bitcoin.
I believe you've talked about quantum computing. Is that right? You follow that a bit. That may be what I'm most scared of, the idea that a quantum computer could someday hack the technology behind Bitcoin. You worried about that too?
It was something that I did mention because I like looking into quantum physics. It's just fascinating to me. And then quantum computing comes up, and I mean, everybody's response to that, I did mention in a video, as a thing to just be aware of. But everybody's response is, yeah, well, with quantum computing, if the hackers get that kind of, you know, computing power, then the people that are encoding and protecting these things are going to have, you know, the same matching power and will be able to handle it. So I can't possibly say that I have enough technical knowledge in that space to give a valid opinion, but it's definitely something that I'm keeping an eye on, because that would, again, that's just another way that the world will be completely shaken up if that were to come out, and the cryptocurrency space would certainly be affected.
Okay, let's shift to something a bit more positive now, and that is altcoins. As Bitcoin has struggled the last few days, some of these altcoins like Monero and IOTA, they're blowing up. JP, one of our writers at the Merkle, has written he thinks traders are essentially converting Bitcoins to altcoins. So they're selling their Bitcoins following the recent all-time high, and they're now buying into these altcoins that are just skyrocketing. Is that also how you see it?
Yep, there's definitely an inverse correlation between the two, and people were preparing for it. Everybody is, you know, establishing their game plan, and it kind of snuck up on everybody with this postponement of the fork. But everybody was saying, you know, once the fork comes out, I'm selling my Bitcoin instantly, and I'm going to buy in these altcoins. I got my shopping list, and so it did take everybody by surprise. But what I'm most interested in is to see, obviously, this is, you know, a reaction and hype and euphoria for those altcoins in response to the fork not going through. I'm interested in how are we going to respond, you know, next week? Are we going to set a higher low and then a higher high? If we consolidate, which will be normal and healthy after that initial bull rush, if we consolidate and then we set a higher high, that will be significant to me, because that will tell me that it is not just the hype of that initial moment that caused the spike, that we are entering now an uptrend with that higher low and higher high, shifting momentum from a long-term downtrend back to the bulls.
All right, now, Dan, I want to get personal with you for a second, because this stuff is really what you do full-time, right? You are constantly analyzing the price action and the markets and keeping people informed about this stuff. And I know a lot of people out there, myself included, really appreciate all the free content you put out there on the crypto markets, on Bitcoin, on Ethereum, on various altcoins, really on a daily basis. Now, I know there's a good business reason for you to do all that, put all that free stuff on YouTube. I get the feeling, though, that you really enjoy this stuff. You really enjoy what you do. You love trading and talking about trading and cryptocurrencies. I'd love to hear more about sort of your passion and what you love about your job.
Sure. So yeah, you're definitely right. I certainly would have stopped this long ago if I didn't enjoy it, because I'm talking, live on broadcast 3 hours a day, doing it plus the recorded videos. So it's literally an everyday thing for me. And I have yet to wake up. This is 2.5 years in, and I've yet to wake up and not want to do it, which tells me that, I'm very passionate about it. And really, it's honestly the biggest give back is the reaction from people just like you, what you just said, and the fact that people will reach out and say like, hey, thanks, you're making a big difference. I'm learning a lot. And it's really just trying to pay it forward, because that's what happened to me early on in my trading career, where I was in college and I was this new trader. I had no idea what I was doing. And I was out on the forums and, looking for information. And I came across who ended up being my mentor, and just the fact that he was willing to answer all of my questions in response, expecting nothing in return. And he literally changed my life to allow me to learn these things and achieve financial independence and live the life the way that I want to. It's just, I have to do everything that I can to try and give that back to people. And what we've done with this platform is really try and do that on a master scale. Whereas he and I were more one-on-one in this forum that, no one was really on. Whereas, now I'm putting these videos out to a few thousand people and just trying to streamline it in terms of reaching as many people as possible. And what I love about it is the mutual beneficial relationship for it. And like you said, there's obviously a reason we put out the free content, because, people learn about us and they want to learn more. And so we do have paid services and paid courses and things like that in addition to the free content. But I love mutually beneficial relationships where I can put out free content. And if, there's someone in college or a student or someone who doesn't have the financial ability to be able to purchase our courses and stuff, that they're still able to take things away and still able to better themselves in terms of understanding financial markets and how to potentially position themselves in the future to earn, even if it's just earning a little bit of additional income. Obviously, not everybody's going to become a full-time trader, but learning this information is beneficial in the long run, even if it's just having, a grasp on your retirement. I know that the generation that my parents are in, the baby boomer generation, they kind of were told, put your money with a money manager and let them do it. This is too complicated. You can't understand how to do this. And so they still don't have any idea really what's going on. And they just say, yeah, they're doing it for me. And I find that very dangerous, especially because we know there's so much shady activity going on in that world, that we really need to be in charge of our own financial futures. And this is a way to do that.
Yeah. And one thing I like about your channel a lot is you don't cover only crypto, although that's my primary interest. You cover other things like stocks and the Canadian marijuana sector as other areas of diversification. I do want to bring up the traditional markets, because one of our Merkle writers by the name of Dariush recently wrote a piece called What Crypto and Traditional Markets Can Learn from Each Other. It's a great read. I encourage everyone to check that out. One of the points Dariush made was that I found especially interesting. He feels that one of the reasons for the increasing interest in the crypto markets over the traditional financial markets, especially among younger people, is the lower barrier to entry. He noted that margin accounts in the traditional financial arena can require thousands of dollars in order to use, whereas anyone can take 15 minutes to sign up on GDAX and start trading with like $5 worth of Bitcoin. Do you agree with that perspective?
I do, and I'm going to have to read that article when I'm done now. But I definitely think that one of the things that I love about the cryptocurrency space, and I was just saying this to a friend the other day, where the stock market is owned by big money. Big old money owns the stock market. They hand down their portfolios to their kids. It's just exactly right. There's a barrier to entry, and they want people to think it's too confusing. It's so the younger generation now, with very little financial knowledge of the financial world, is becoming, millionaires with cryptocurrency. And I find that so cool that there's this shift going on where it is the new younger tech generation that's making money in markets that otherwise would not be doing so in the stock market. Because in the stock market, I compare it to poker, where if you're playing poker and you want to up your stakes and you want to make more money, you have to buy in more. And that requires you're going to be playing more skilled players. It's a different game. Whereas the stock market, I can make the exact same trade as a multimillionaire. We can both make 1% on a trade. He's going to walk away with, $100,000. I'm going to walk away with $10,000 if my stack is that much smaller than him. It's the same game no matter how much you scale up, which is why the rich get richer. And it's such a big advantage for the people that already have money. So the fact that this market is so new with cryptocurrencies and people, obviously the draw is, people making millions of dollars and the thousands of percent gains. That's really eye catching and attention catching, where people want to change their lives. And this is an avenue to potentially do that. But it's just the new age, the internet. And you're right, the low barrier to entry. We have high schoolers that are messaging us, and, we're giving away free courses to high schoolers because I know they don't have a lot of money saved up. And absolutely learn how to do this, and maybe you can change your life.
That's awesome. Don't you think, though, that the get-rich-quick sort of mentality is potentially dangerous as well? The fact that we've seen such substantial gains in the crypto world over the past year. You've talked about the fact that the bulls need to take a break once in a while, and multi-$1,000 returns just aren't sustainable. There's the possibility for people to lose a lot of money just as easily as others have gained it if they're not being careful, isn't there?
Absolutely. And it's definitely the kind of thing where people coming into this market, if you came into this market in early 2017, all you know is insane gains, and that's not normal. So as soon as the market changes, people can get in a lot of trouble. Trading, if you're trading or investing, it completely changes when we enter a bearish market, and that's where people give back a lot of money. And another dangerous thing about it is people plan into the future. I've met with a group that, pools their money together, and they have goals like we're going to hit 30% each month because that's the way it's been going. And I'm trying to say we cannot assume that it's going to keep up like this. We cannot assume we're going to make 30% every month. And the other risk is the fact that the people, like I said, who come into this market and all they know is bullish action, they see all this money, they've made a good chunk of money this year, and they say, I can quit my job and I can do this for a living. And if we hit 6 months of a downtrend of bearish action with little action going on, which seems hard to fathom at this point, but it's entirely possible, that's something that they're not going to be aware or able to navigate, and it's going to potentially cause a lot of problems. So I definitely caution against people that only know a short window of what this market is and think that it's going to be like this forever.
Yeah, but on the flip side, the silver lining, I think, is that regardless of what the price may do on a day-to-day basis, there are other ways to profit from this brave new world of cryptocurrency. Andreas Antonopoulos, one of the great Bitcoin speakers and gurus out there who I really respect, has talked about how investing in knowledge and skills is way more beneficial potentially in the long run than investing in a Bitcoin or anything else monetarily. Obviously, he makes his living in that world, as do you. There's other ways to make a living with this stuff. You can work, obviously, in the tech industry, working on the blockchain. You can start a website. You can start a YouTube channel, as you have. So for those who don't want to or can't afford to invest in the markets themselves, they can still learn about cryptocurrency and Bitcoin and blockchain and all that, make that their life's work or profit from that in other ways.
Absolutely. You see the amount that Ethereum developers are getting paid. You can get a starting job for $250,000 salary, which is, obviously a great introductory pay rate. So it's definitely right. It's opening this whole world of, I'm a big believer in all of this blockchain and everything that I do believe it's going to shake up the world and all these industries. And so you're right that there's a ton of peripheral sectors where, there's opportunity presenting itself. And you're exactly right about YouTube channels. You're seeing all these YouTubers pop up in the cryptocurrency space, and they're earning income off of their videos. And that's just putting out information. They're sharing knowledge and they're getting repaid for their content. So that's just one example, but there's so many opportunities, and this really is just the start. So you are right. It's not just the price of the coins that matters. And it's good to remind me of that sometimes, because I've got my head in the chart all the time, but it's good to zoom out and focus on the bigger picture, where this is just the start and things are going to significantly change from here. And there's going to be jobs opening up in industries that, this blockchain is going to affect.
Dan, in your opinion, is trading an art or a science? If either.
Oh boy. Trading is a science, but it's honestly, I always say that a psychologist that learns how to trade would be really good, because I actually mentioned to my partner, let's try and get a psychologist who's interested in markets on our team to give that perspective, because it is so ingrained in emotions and the human brain and how humans react to things. That is the most important factor. And I always say, people ask me, if I take your courses and if I learn these things, how long until I can quit my job and become a full-time trader? And my response is always, I can teach the exact same thing to two different people. One person could go on to do this full time, and the next person could blow up their account in 2 months. And that's completely on the individual, how they react to psychological stress, whether or not they're able to follow their rules and things like that. So there's so many, people look at technical analysis and all the skeptics, they say, oh, this doesn't work, but you can't uniformly apply it to people, because the person pushing the buttons is the biggest factor as to whether or not technical analysis can work or not. So I would say it is a science, but definitely psychology is a huge part of it. And in terms of it being an art, I think it's definitely more analytical than that. And I would go with science.
It is visual though, right? As you have said, visual people may have an advantage in just glancing at a chart and getting a sense for what the direction of the trend may be at any given moment, right?
That's very true. Patterns that stand out to people. My partner Jason, his strategy is way more into patterns than mine is. Mine is with the numbers and the physical levels, and he's drawing the lines and the shapes and the patterns on his charts, and it's just a different style. But the people that are able to visualize these things and pick out the patterns quickly definitely have a bit of an advantage in terms of at least the speed in which they're able to react to things.
Interesting. The fact, though, that there are so many numbers and the numerical aspect of this, of trading and the various indicators like RSI, volume, whatnot, they're all numbers, which makes me think about bots. And you talk about bots in your course, and one thing I got out of the course was how to learn from bots and take advantage of bots, even if you're not a bot or you don't operate a bot. But to the extent that this is a science and this is a number-based enterprise, what's to say that bots aren't going to do your job at one point? What's to say that bots couldn't be better traders than any human, even a psychologist?
Maybe they could. I'm not going to say that they can't, because technology is astounding and it continues to astound me day after day. But I've yet to see one that can. Normally, what I've seen in this reaction in the space right now is that these bots really take hold when there's a lack of volatility, and they're able to pinch their pennies and scalp these little trades when there's not a lot going on. And then when you see the big spikes and the crazy volume, that's when they kind of disappear, and they disappear to the sidelines. And that's because they're not really, they're programmed to be able to react and play out as they are supposed to in certain environments. But as soon as that environment completely changes, they're not really able to react and capitalize on these huge moves. And we had people in the chat room mentioning it, where we were watching these bots and they were doing things, and then the news came out of the postponement and they disappeared. And so I feel like for a human to be able to react to these things definitely gives an advantage, where, a lot of people were caught by surprise. I feel like a lot of bots were caught by surprise. And I think the people that were watching and calm and collected and had a game plan would be able to perform in that kind of scenario better than a bot could. That being said, I'm not going to, our goal is not to beat the market, and no one's goal should be to beat the market. We are, in my opinion, with at least the stock market, my goal is to ride the coattails of the people with huge funds that are moving the market. And I'm trying to recognize that happening and get my piece of the pie. So I'm not trying to outsmart the market. I'm just trying to recognize where money is moving and ride the coattails, like I said. So, if these bots are taking over, you have to assume that there are bots that are very successful, and that's a fact in the market. And I'm sure they're in the cryptocurrency space as well. But you have to assume that, if it does become easy enough to program bots to do it, they're going to become null and void, because there's going to be so many bots interacting with each other and just battling with each other that it's kind of going to even that space out, so to speak. So my opinion is, yes, there are bots that are trading very well in this space right now due to their programming. But it's also my opinion that when we are not in a raging bull market like we've been in all 2017, that those same bots that are doing very well are not going to do well once we enter consolidation mode.
Yeah, and I suppose ultimately a bot, like any other piece of software, is only as good as the human that programs it, right? Although that assumes that at some point robots won't be programming other bots. There was actually a pretty crazy story on the Merkle recently about Facebook, and they have an artificial intelligence lab with robots. They were doing an experiment with some robots they had created, and Facebook had to shut down the experiment when their robots literally created a new language to communicate with each other, and Facebook had no idea what they were doing anymore. So I guess the sky's the limit for bots.
Yeah.
Hey, Dan, I would love to hear you comment on money, the idea of money and attachment to money, because it's something that came up in one of your courses, and I feel as though you have a unique view on things. I think you said something like you view money more as video game points rather than something more tangible in reality. So could you expand on that and tell us sort of how you came to view money that way? Were you raised a certain way? Do you have a realization that like money is this way? Like, talk to me about money.
Yeah, certainly. It's you're definitely dead on in terms of the biggest, like I say, it's all psychology, and the biggest attachment to these emotions and psychology is because of money. And for me personally, I don't want to give the impression that I grew up rich and, just don't have to care about money because it's everywhere, because that's not the case. I started out with, $5,000 saved up from high school jobs when I started trading in college. But it was just, I think it's the ability to zoom out to the bigger picture of life and to know that there is so much more in life that we can be, happy for and grateful for. So a story for me is when I was early in my trading career, I started in penny stocks and I took a really big hit. I lost $5,000 overnight when a company was delisted. I learned a ton of lessons there, but it was a very significant amount of my capital. And I remember that day when that happened, looking at myself and reflecting. I always zoom out. What I do is I zoom out of the situation so I can get an unemotional perspective of what's going on. And I was looking at myself and saying, wow, I'm really not negatively affected by this. Sure, it's a bummer. Sure, I would be happy, if it didn't happen, but I'm here breathing and I'm looking at the sun and life's going to go on and everything's going to work out fine. And so just having that, mindset where you are able to zoom out and realize that, these are just numbers on a screen that are flashing and they could easily say zero one day, or just not be getting attached. And it's also detaching, not viewing it as, say you take a $50 loss on a trade and not saying, oh man, I could have had $50 worth of groceries this week. You don't want to attach things to material objects. It's just having the confidence to know that you will be able to get more of it. If you lose some money, if you have the skills and you're confident in your abilities to be able to get more money, it's just this energy source that's always flowing in and flowing out. And it's a lot of the mindset that people have where, if you give a lot of money, it'll come back to you. And I'm definitely a believer in that, where you don't want to be hoarding money and have it be stagnant. It's this energy source that needs to flow through you in both directions. And it's just the confidence in knowing that, worst case scenario, we're all going to be all right. We're still going to be living our lives and we're still enjoying this, one life that we have, depending on whatever religious belief you have. But just knowing that it's not going to be the end of the world and tomorrow the sun will rise and we'll be able to go on with our lives from there, and to be able to bounce back from that feeling of that sinking feeling in your stomach when you lose money. I've felt it plenty of times, but you just have to work through it and zoom out to the bigger perspective in life and what's really important. And that's, in my opinion, friends, family, love, life experiences, all of that, way more important than money or numbers on a screen.
Cool. Agreed. So my other follow-up from your course was about Golem. You mentioned you were bullish on Golem and that you expected it to be added to Coinbase at one point. Are you still holding out for that?
I am. I do have it's actually the only long position I have. And I want to, clarify that it's a very small position. It's 3% of the total profit I've made this year. So, if it goes to zero and gets erased, it's no biggie whatsoever. But I do like the project. I like the team. I like the idea of things. And I do like the potential of it getting added to Coinbase. And I know there's a lot of people that are following along with the project, and there's still a long way to go. But in terms of just picking, I want to have at least one long horse, because it's very hard for me to go long in anything when I'm sitting here looking at the computer all the time and seeing all these micro moves that I can be acting on. But that is one that I am sticking away, and I'll reassess it once it gets added to Coinbase. Fingers crossed.
Why do you think it'll be added to Coinbase? There was some code, I think, earlier this year that had a couple of coins that were not currently on the exchange, one of which was Golem in the code. Is that why you think they're going to put it on there?
That was a one factor. There was also the fact that Coinbase did publish I forget what they call it, their journal or whatever it was. They published an article in a similar way that they did for Litecoin before adding Litecoin. And they talked about how they wanted to, incorporate coins that would facilitate relationships with other coins. So I feel like the Ethereum based coins would be towards the front of the line in terms of names that would be added to Coinbase. And again, it's a shot in the dark. I don't usually, hope for news. I don't buy positions and hope for news. This was just having a really good year in 2017 and wanting to stick a little bit of profit into a high risk, high reward name that could pan out in the future. And because of those little details that I just mentioned, and you mentioned, that was enough of a potential scenario of getting added to Coinbase, which would be pretty much the short-term home run. That was enough where I said, sure, let's gamble a little bit.
And I think you've said in regards to Bitcoin, you're waiting on Amazon if and when they announce they'll accept Bitcoin as a payment option. That would obviously have huge ramifications for Bitcoin. You've talked about ETFs, and the minute an ETF is approved finally for a particular currency, it's worth making a big buy. Are there other things to keep tabs on?
Those are definitely the two biggest events that I feel would have the significant short-term effect on the cryptocurrency space. And like I said, ETFs, just because it would it would lower the hurdle where now, okay, stock market money can get into this game. And I am also watching out for, like I said, Fidelity. Their CEO is very pro cryptocurrency. So I'm looking for Fidelity to do something. I mean, all of these brokers are trying to, there's a broker battle going on right now referring to the stock market, where technology is changing, and fees used to be $8.95 a trade, and then technology changes, so now this broker is going to $6.95. Now Fidelity is going to $4.95. So they're battling each other, trying to position themselves as the leader in the space. And this right now is the golden opportunity. The first stock broker that somehow incorporates cryptocurrency into their model, into their system, is going to absolutely take a big leap forward, in my opinion, in that space, in the amount of customers they're going to see and in the amount of, recognition that they get from that. So like I said, I think behind the scenes, there is a lot of big boy money, big companies that are competing to be the first to really embrace this space. And so anything, Fidelity or Chase, or I know Fidelity is probably the most likely to do it, but once one of these names really opens their arms and embraces the cryptocurrency space, I think that's another catalyst that will have a significant impact in the short term.
So you guys have a new crypto alert system out, right? Why don't you give us an overview on that and tell us how that's been going?
Sure. It's been going really well. It's the crypto.chartguys.com. And so what we did was we made our course, and the feedback from that course was just jaw-dropping in terms of, it was really rewarding for me just because I put a ton of work into it. And the fact that people are getting so much out of it is really, like I said, it's just so motivating for me to keep going. So the next thing, what we're all about is listening to the community, the cryptocurrency community. What do you want? Like, what will help you trade? What do you want to learn? And then, responding to that. So people want alerts. People want to know when to buy and sell. And these alerts are not going to say, when to buy and sell. What it does is you go to crypto.chartguys.com, and we have a couple different tiers in terms of levels of membership, but you fill out the alerts that you want for the coins on the different exchanges that you want. And the alerts are things like RSI levels. So you can get alerted to your phone or your email when the RSI enters overbought conditions or oversold conditions. And we developed some of our own proprietary indicators that pretty much why I love working on this project is because I'm a trader and I want to be told by a robot when something's going on. I don't want to have to stare at my screen the whole time. I want to be out enjoying life and then, get a little thing on my phone that says, hey, there's a action going on in Litecoin. And then I hop on my computer and respond to that. So we have some proprietary indicators that let us know. We call it the price shear indicator. When things really pick up, when volatility and action picks up, it sends out these alerts that let us know, hey, there's something going on. And you then get the ability to hop on and react to that. But the customization that we have is, you can choose the coin, you can choose the exchange, you can choose the time frame. If you're a day trader, you're looking at the shorter term time frames. If you're a swing trader, the longer term time frames. But it's just opening up this world where, you go to the stock market world and there's 100 different alert systems and 100 different things in terms of servicing that space. But the cryptocurrency space is so new. There aren't these kind of alert systems that can help people trade and the tools that traders want. So essentially, I'm sitting here in my chair and saying, okay, what would I want to be alerted to? And then we have a developer that we converse with and convey that to. So we're working on, high volume alerts when volume's going to spike up. We're working on potentially some social media alerts. We're working on it's really fun to be creative in this space to allow us to best serve, what will tell me the soonest what kind of advantage I can get in terms of jumping in a trade because of things that are going on the chart without having to be staring at the screen all day.
Now, as far as the alerts themselves, what form do those take? I think you started with text messages, right? And then you had to change that up?
Yeah, we started with SMS alerts, and then we had people that were filling out and checking the box on every single coin and every single alert. I'm not sure if they were trolling us or what, but they would end up getting hundreds of text messages a day. And obviously the rates are going through the roof for the people that are doing that and really ruining it for the people that are doing it the right way. So we went to Telegram, which now you can have, unlimited alerts, any country, anywhere in the world. And that really opens it up in terms of not having those costs in terms of having all the alerts that you want to get. So we do Telegram and we do email alerts, and, Telegram is going to send it right to your phone. And the amount of feedback that we get is in terms of like, hey, I just signed up and in my first trade, I paid for the month. And that's ideally, like I say, mutually beneficial relationships. That's what we want to facilitate. And if you're not making money on this alert system, by all means, don't pay for it. But ideally, you're making money and then some because of this alert system. We get some money for providing the service. You make profit by using the service. That's the best case scenario. And I love when we have that kind of mutually beneficial relationship with the cryptocurrency community. And the best part about it, like I said, is the feedback where we are changing so many things. And I can't tell you how many times I get a note from a member that says, hey, you should do this. And this would be better if this happened. And I just, send that right over to the developer. And within a day or two, we have that change made to our system. So it's really essentially being developed with insight from, dozens and dozens of people in this cryptocurrency space, all kinds of traders, swing traders, day traders. So it's just a really fun project to be a part of, and glad that it is helping people profit.
And how many coins are there in total that people can keep tabs on with your system?
A whole bunch. It varies by exchange right now. I mean, we're continuously adding exchanges, but we've got GDAX, Bitfinex, Bittrex, Kraken. We just added Binance. I made a video and I said, hey, what exchange do you guys want the most? And everybody in the comments left their exchange, and Binance was the winner. So 2 days later, we added Binance. But we've got the big three on GDAX. We've got 15 plus on Bitfinex. We got 20 on Bittrex. So there's dozens and dozens of pairings, and they're all on the front page of the website. You can just scroll down crypto.chartguys.com and it'll tell you all the available currency pairs. We got Euro pairs, USDT pairs, US dollar pairs, Bitcoin pairs. So.
Oh, okay. Because if you were talking about like hundreds of currencies, I was going to say, I think I know who might have checked all those boxes and signed up for everything. There's a guy on Reddit who made a post called Buy All the Coins. He bought a little bit of each of the top 50 coins, and I think he was just trying to see if he could be like the ultimate diversifier by owning a little bit of every currency. Can you do as well as someone who's primarily invested in Bitcoin or Ethereum or some of the top altcoins? I mean, that's borderline crazy, don't you think, Dan?
I would be astounded if that would work. It's certainly very interesting. But yeah, in my videos, I talk about how I feel, 90% of them are going to fail just because I've seen this before with stocks that pop up and try and jump on hype and don't have the fundamentals backing it up and just fade away into nothing. And I do feel a big portion of the ICOs that are happening are going to follow that same path. So I would be astounded if that works out, but it would be very, very interesting if it did.
Yeah, we'll see what happens. Just to wrap things up, Dan, it seems to me that cryptocurrency just has to have been a game changer for you and your company. Again, you guys cover other things like gold and stocks, but I've seen the views. Your videos on crypto must get orders of magnitude more views than anything else that you put out there. Has this been just a game changer for you in your life?
Oh yeah, and that's just the market. Like I said, the market is just screaming this year, and those, our highest view videos would be 800 to 1,000 views, and then I put out a cryptocurrency video, and I see 4,000, 5,000 views. I'm saying, okay, there's something here. There's a lot more people interested in cryptocurrency than they're interested in gold right now. So I'm going to keep providing that content. It's what the market wants. So giving the market what it wants, and yes, it has absolutely opened up, because it's a whole new world of people where they are unfamiliar with charts and technical analysis, but they can see, and they're much more open-minded to it. You look at the older generation and they think technical analysis is just hocus pocus. And this younger generation is really open-minded to it, and they're utilizing it, and they see the benefits of it very early on, and they're learning it at an early enough age where I say this is a game of decades. If you learn and invest the time to learn in the next couple of years, you are setting yourself up for the next 30 years. As long as there is something to trade and a market to trade it on, you can utilize charts to benefit yourself in terms of just having a grasp on the situation. The number one thing that people struggle with when they don't have charts and technical analysis is why. Why is this happening? Why did this happen? When you have the charts and you can see it visually as to what's occurring, it really answers a lot of that why, and things make a lot more sense.
Why do you think there is a prejudice against technical analysis on some people's minds? Is it people just don't want to have to learn in something?
I absolutely think that's it. I think it's a justification for, I won't call it laziness, but a justification to not put in the time to educate yourself. I have never met somebody learn how to utilize technical analysis and then decide, this doesn't work, I'm not going to use it. Everybody that is a critic of technical analysis has not put in the time to utilize or to learn it and to practice it and utilize it. So that's all that I need to know. If you tell me that, 99% of people that learn technical analysis then use it, that's all I need to know, because it's all the critics standing on the outside looking in and pointing and saying that doesn't work, when in reality, even some of the studies that people point to and say, look, this doesn't work, look at this study. And I read the details of the study, and it's just so astounding that would be the parameters that they tested it on. And it's just nowhere near technical analysis and what a human would do in terms of reacting to charts. So I do feel it is just an outsider trying to justify their inability to commit the time to learn.
Wouldn't you agree, Dan, that there's some people out there that just can't handle trading? Like, they're not wired, they're not built to do that? It's just too stressful, or for whatever reason, it's not going to work for them? Aren't there some of us just wired differently?
Absolutely. I don't think it is for everybody, but I don't think those people that are, realizing that and saying this isn't for me, I just don't want to look at it. I don't think they're, pointing to the technical analysts and saying that doesn't make any sense, that's made up. So I feel like, they've bowed out, which is absolutely acceptable, because you're correct. There are people with different brains that work different ways, and some people really don't like. I have my screen up, and I have a lot of friends, and I'm not really in the space of friends where people are used to, business and finance and markets, and they walk by my screen and they just get really overwhelmed seeing all the colors and numbers and flashing stuff that they're just like, whoa, I can't even look at that. So I certainly understand that aspect of things. And yeah, they definitely get a free pass, where if that's what helps you sleep at night, by all means, go for it.
Yeah, do you, right? We're all different. Well, Dan, we'll leave it right there. We appreciate your time today.
I appreciate it. Thank you. Have a good day.
We'll put links up to that alert system, as well as to all the articles I mentioned from the Merkle. So until next time, to everyone out there, thanks for listening to the Merkle Podcast.
The preceding content is for informational purposes only and is not investment advice. For more, go to themerkle.com. This has been the Merkle Podcast.